Have you ever wondered which crypto strategy actually makes more money in 2026, P2P trading or arbitrage? Most beginners dive into crypto blindly and lose money because they don't understand the difference. In this video, we're going to break down both strategies, compare profit potential, risk, and time required, and I'll show you exactly which one you should start with if your goal is daily income, even with a small budget. Stick around, because by the end, you'll know which strategy is better for your goals and how to actually make money safely. Part 1. What is P2P trading? Let's start with P2P trading. P2P, or peer-to-peer trading, is basically buying and selling crypto directly with other users, usually on platforms like Binance, Paxful, or local bitcoins. Here's the key. You are acting as both buyer and seller, setting your own prices. Beginners love P2P because 1. You can start with small amounts of money. 2. It's beginner-friendly, no advanced charts required. 3. You can profit daily if you know the right techniques. Now, the pros of P2P trading. 1. Low barrier to entry, you don't need huge capital. 2. Quick profits. Many traders make $20 to $50 a day with consistent activity. 3. Flexible. You can trade anywhere with just a phone. The cons are also important. 1. You are exposed to fraud and scams, like fake receipts or chargeback fraud. 2. Profit margins are small unless you scale. 3. Time-consuming if you try to trade without strategy. So in short, P2P trading is beginner-friendly and consistent, but it requires vigilance and patience. Part 2. What is arbitrage trading? Arbitrage is the process of buying crypto on one platform at a lower price and selling it on another at a higher price. The profit comes from price differences between exchanges, like Binance, Bybit, or Kraken. Pros of arbitrage. 1. Higher profit potential per trade than P2P if you find the right opportunities. 2. Quick transactions. Sometimes you can make $50 to $200 in minutes. 3. Can be automated with tools once you scale. Cons of arbitrage. 1. Requires quick execution. Prices can change in seconds. 2. Fees. Withdrawals, deposits, and trading fees can eat into profits. 3. Higher skill requirement. You need to monitor multiple exchanges and understand liquidity. So arbitrage can be more profitable per trade, but it's also riskier and more technical. Part 3. P2P versus arbitrage. Profit comparison. Let's compare them head-to-head. Imagine you have $500 to invest. P2P trading, you might make $20 to $30 per day with 1 to 2 hours of work. Arbitrage trading, you could make $50 to $100 per day, but only if you find the right opportunity quickly. Here's the key difference. P2P is consistent but lower profit per trade. Arbitrage is higher reward but higher risk and more effort. Let's also talk about scalability. P2P, you can increase daily profit by trading more frequently or using multiple platforms. Arbitrage, scaling is harder unless you automate or have multiple exchange accounts. Now, for beginners, I recommend starting with P2P to understand crypto trading, minimize risk, and get small daily wins. Once you are comfortable, arbitrage becomes a powerful secondary strategy to boost your income. Part 4. Risk management. Here's where most beginners fail: risk management. For P2P, always trade with verified users. Never release crypto until you confirm payment. Start with small amounts to avoid losses. For arbitrage, factor in all fees, trading, withdrawal, and deposit. Don't chase tiny spreads. Small differences can vanish in seconds. Consider starting with automated tools to reduce human error. Remember, consistent small profits beat occasional big wins. Risk management is the difference between surviving in crypto and losing your entire capital. Let's make this concrete. Here's a daily workflow example for P2P. 1. Check active buy-sell orders on Binance. 2. Find coins with good spread. 3. Execute trades in small amounts. 4. Confirm payments carefully. 5. Track profits in a notebook or Excel sheet. For arbitrage, 1. Monitor price differences across 2 to 3 exchanges. 2. Calculate fees before trading. 3. Execute buy on cheap exchange. Sell on expensive exchange. 4. Repeat when opportunity arises. Here's the bonus tip. You don't have to choose one strategy forever. Use P2P for daily consistent profits. Use arbitrage when you spot a high-value opportunity. By combining both, you create a more stable income stream while maximizing your profit potential. To summarize, P2P is beginner-friendly, consistent, and low-risk. Arbitrage is higher reward, faster, but riskier and more technical. Start with P2P to learn. Scale with arbitrage when ready. Always manage your risk and track your trades carefully. If you found this video helpful, check out my other tutorials on beginner crypto strategies. And here's a challenge for you. Comment below which strategy you're going to try first, P2P or arbitrage, and I'll give you a bonus tip in the next video for maximizing your first $100 profit.